Hey, welcome. It's day 20 of the 30-day money course. And today we are going to find out what type of investor you are. I'm Elizabeth Booker. I'm the founder of Wealth from Little, and I'm also your hostess here on this 30-day money course. So, what type of investor are you? Okay, there are three main types of investors, and you've probably heard these terms before. They are one, active investors, passive investors, and inactive investors. And so what does that mean? An active investor. An active investor is the type of investor that that places like invests daily. So you may have heard the term day traders, right? So they trade in the stock market every day. And the idea behind it is they are able to make a lot of money really quickly. So they're looking for that short-term win. But one other thing, the other side of that is that they're also able to lose a lot of money really quickly. And that's why active investors, well, the good ones, have to learn a lot. They need to understand exactly what they are trading, what they are investing in, what they are buying and selling. So trading is just the buying and selling of stocks. They need to understand what they are trading, why they are trading it, and understand how to pick the right stocks to invest in. There is a lot of risk with regards to day trading, and so there is also potential for high reward. So you may find someone may tell you, oh, buy this particular stock and hold it for just a little while, you make a lot of money. Yes, that may be true, but they may not tell you about the 8 out of 10 other times that they lost a lot of money because of this because of this quick trade, because the stock market is very volatile. You don't completely know exactly the point to buy and exactly the point to sell. That's why it's important to understand what you're doing if you are going to be a great day trader. Understand and make sure that you have learn and keep learning how to do this effectively, right? And then of course you can win with it. Then the second type of investor is the passive investor, right? So you are creating passive income because you're going to do something once and trust that it will replicate itself over time. With the active investor, each day you are going in to manipulate your stocks, you're going in to manipulate your trades, you're going in to manipulate your investments. So the growth you're getting is because you are actively doing something. With passive investments, and in fact passive investors, they learn once, they understand what they've learned, and they create a system that just replicates what they've learned and understood over and over again. So if you invest in index funds, for example, an index fund investor is a passive investor. So she understands exactly what is an index fund. She understands how to invest in an index fund. And then she decides every month, I am going to be investing a certain amount, or every quarter, I'm going to be investing a certain amount in index funds. And now she doesn't have to learn it all over again. She's learned it once, and she's just going to replicate the process over again. And she can easily do that by creating a direct debit between her bank and her investment account, so that every month or every quarter or every week, for example, a certain amount of money is transferred to her investment account and it's put in the right fund that she has set up. And it's passive, so she doesn't have to actively manipulate it. All she has to do is sit down, relax, and watch her dividends roll in. The third type of investor is the inactive investor. So this is the type of investor that is maybe cautious. They don't know what to do with their money. They haven't learned what to do with their money, and they don't necessarily want to learn what to do with that money. So they would rather pay someone to actually do the work and to invest on their behalf. So they are completely inactive. All they did was earn the money and they hand it over to a broker, a stockbroker, a manager, a fund manager, who will now invest their money for them, and then they will receive the growth on the back of that. That is also a great strategy. However, because you are not doing, you're not setting up the accounts yourself, you don't understand how it's been set up, you don't understand what you're investing in, your fund manager, your brokerage, your stockbroker is doing all this for you. So therefore, he will collect a fee, he will collect a percentage, and this can really reduce your earnings. So where you could have been earning 100% return, maybe you would earn something like 70% of that, right? Of that return, where, if the return was 100%, would have been like 100%, you would earn like 70% of that, because like 30% would go to your broker. Brokerage fees are roughly around 1%, and that may, and 1 to 2%, right, for an actively managed brokerage fee for someone to manage your fund for you. But that may seem like a small percent, but it does add up. It really does add up. And 30 years down the line, it could look like almost 30% of your profits, of your dividends, gone in fees. With regards the difference between the three in terms of fees are, when you're investing, you do have to pay fees for each platform anyway. However, with regards to passive investments, if you are doing it yourself, the fees are usually much lower on brokerage platforms where you are the one investing yourself. Like I shared yesterday, if you are investing in index funds, fees are between like 0.07 and 0.2 or something. So they're really low. Whereas if you're investing via, if you actually have someone who's doing the work for you and all you're doing is handing them over your money, it can be a bit higher. Now, an example of inactive investments can be some pension funds. So some pension funds are invested in mutual funds, right? And these actually have fund managers who are actively looking after the fund, and they get paid. Because they are going to get paid from your profits or from your capital, your potential returns is reduced. So those are the three types of investors. And I would love to know, what type are you, or what type would you like to be? Personally, I am more of a passive investor. I like to understand and create systems so that my money just keeps working for me on autopilot. I have tried day trading before. I do not have the time space to consistently day trade. So I'm not into that right now. Maybe in the future I might be, but right now it's not something I'm extremely into. And I do not see the point of paying someone else to manage my investments when I could do exactly that. And so I am not an inactive investor, I'm a passive investor. So I'd love to know from you, what type of investor do you think you would like to be, or are you right now? So that's day 20. And tomorrow is day 21. And we are literally 9 days away from the end of this course. And because we are so close, I want to celebrate you for actually sticking this far. Not many people start and they don't get, they don't complete. Many people say they're going to start something and life shows up and it holds them back, but not you. You have stuck through it. So congratulations, well done. And I'm going to see you on our next live group call. Okay, have a great day. See you tomorrow. Bye.